Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 48th Commitments of Traders report of 2021, and as we always do, we shall start off by looking at the largest changes in commercials positions. But before we jump to the review, just a brief reminder for those of you who are new to COT analysis. Here at COTBase.com, we offer a lot of educational material that will, explain to you what the Commitments of Traders report is all about, what kind of signals they are, how to analyze the report. We also have some very useful videos too that will guide you through the analysis process, explaining to you all the different ways that you can analyze the reports. Okay, back to the review, and starting off with our first market, which will be sugar. You can see sugar is on top of our list with a 51% change in commercials position. So we've got commercials on the left side of this table. This is of course measured on a 52-week look back period. And of course, commercials are represented with the red color. Large speculators are green. And then small speculators, who CFTC calls non-reportables, are represented with the blue color on a different scale chart. Of course, they're not trading in as great volumes as commercials or large speculators. So here we have that change size. And if you compare that to the past 1 year, it's definitely amongst the greatest changes, possibly the greatest change in the last 1 year. It is, of course, a bullish COT change signal coming after a decline that's been going on for about 2.5 weeks now. So it's a good signal, I should say, and it suggests that the market should react and we would see a bit of a rise in the next couple of days. Now, actually, you don't have to go back too far, just until October, where you can find a similar movement in the market followed with a bullish COT change signal. That's actually a good example of how these COT change signals can push the market in different directions. Now, moving on to the 5 years chart, you can see that we are still closer to bearish COT extreme levels, right? If you look at this 5 years time span, it's easy to see that we had the most bullish extreme in October of 2019. And we had significant bearish extremes since November, for a year now, basically, without any major shift in the trend. So it's still more bearish in my view, but we have moved away, especially with this recent change, from those very large bearish extremes, which just to me means that there's a good chance that this trend that we're seeing may actually continue on, and we should see an even greater extreme before there's any change or shift in the trend. Moving on to our next market, that's going to be cocoa with a 37% change in commercials positions. Jumping to the 1 year's chart, there you go. Commercials net long, large speculators net short. They've been going back and forth in the past couple of weeks. Again, this is a bullish COT change signal, maybe not as beautiful as the one in sugar. The reason I'm saying that is that we have seen cocoa gain some strength on Thursday, continued on Friday. But it does show that these signals are pretty effective. Moving on to the 5 years chart, the picture is definitely different. So it's not a bearish extreme that we are witnessing, but rather a bullish COT extreme, suggesting strengthening in the next couple of weeks, possibly month ahead of us. You can actually do your research very easily, even on a 5 years chart with the method I'm just showing to you, so you can see and analyze what happened to the market when we had a more clear bullish extreme, meaning commercials relatively having a higher volume of contracts net long, and of course large speculators net short. That is usually the case when we are at a bullish extreme. So you can see that is becoming a reality, and we may actually see this market gain significant strength in the next couple of weeks and month ahead of us. Moving on to a currency, New Zealand dollar, 26% change over there. Of course, shifting to the 1 year's chart, it becomes more visible. So definitely greater than average. We have seen a greater change in the past. Again, we are talking about a bullish COT change signal. We have a few bearish change signal examples, one after that top over there, and a few more just preceding this decline that's going on. So this suggests that we may actually see a rebound in the New Zealand dollar. Of course, we're measured against the US dollar. Moving on to the 5 years chart and taking this horizontal line, that's an easy way to kind of position stresses compared to the stress levels that we've seen in the past. So you can see easily from July 2017, we had a significant bearish extreme. We are far away from those levels, and of course, pretty far away, even further away from bullish extremes. So I don't really think there's much to see. We should look at the last more significant extreme, which actually was this bullish one. Then again, you can argue that maybe the bearish extreme that was visible in early this year, February of this year. Actually, I should say that maybe a little bit more to it. That's in place right now. So of course, if that is the case, we had that bearish extreme and that was the top, we should expect the market to continue its decline. And as it does, eventually we'd see commercials going back net long and large speculators into net short territories. And of course, you can see a bunch of examples what to expect to have a really clear bullish extreme. Moving on to large speculator COT extreme analysis, we've got the Euro-British pound pair on top of our list with a 273 report extreme. Interesting to see both large speculators and commercials net short and only small speculators being optimistic about the market. This in itself usually can be viewed as a bearish signal. Then again, you always have to compare each traders to their previous track record, and in that sense I would say commercials are more in a net I would say bullish territory, to be specific. But at the end of the day, whenever you see a futures market that has a currency pair in it, like the Euro-British pound, it is very a good idea to analyze the Euro COT report and then the British pound COT report separately to really measure the strength against each other. There's not as much volume in the Euro-British pound futures contract. Mexican peso will be the next market. We have a 249 report extreme over here. It's an unquestionable bullish COT extreme. Very large, about this is a 5 years chart. You have to go back to these levels to find an extreme similar to that, and actually that was a very nice bullish extreme that was successful and pushed the market higher. We are witnessing similar levels. Of course, these extremes can widen and widen for many weeks and months, so don't try pinpointing exactly the time when the market will shift. Nevertheless, understanding that there's a bullish extreme in the market can definitely help you if you do have, let's say, a system that is giving you buy signals for instance, then you can feel comfortable that the extreme also supports you. The true US dollar index will be our last market for this brief review. Here we have a 128 report, roughly 2 years worth of a bearish extreme. So of course we're talking about large speculators, but also commercials are at the same 128 report extreme. So you can measure it easily. This is a bearish extreme. Again, this can become even larger as the dollar strengthens. So that's something you should keep in mind. Nevertheless, it seems to be an interesting and clear signal that we may see the dollar turn its course downwards. So we'll see how that develops in the next couple of weeks and month ahead of us. Now, don't forget that we do have, of course, the reports for all the major market categories. We only show you a few here in these reviews. And of course, you can always go and check the latest commitments or traders reports. We are only looking at the legacy or classic commitments of traders reports. We have all the data types, of course, available. Also, the options only. If you're interested in analyzing a specific data set, then you can definitely do that. There's a bunch of them here. You can dig deeper in your analysis with the tools that are available here. And of course, if you have a specific market that you trade, let's say the Australian dollar, then you can definitely go into deep analysis by opening this left side panel and then just have the Australian dollar in front of you. Now, we do have some very useful indicators. The COT Base Pro, which is basically everything that you see on our website, but you can actually opened the analysis in NinjaTrader. So that's something unique. It does include everything in the premium access, so you get a premium access with the Pro. The ICOT intraday indicator is, I think, something very, very interesting. It is a more shorter term analysis tool that we developed after many years of work. It is not a data coming from CFTC. It's our own reverse engineered COT data. That's how we call it. And you can see many examples of how that looks. Very similar to the commitment of traders analysis that we do on the classic COT reports coming from the Commodity Futures Trading Commission. But as you may see, this example showing you gold on a 1 minute candlestick chart, we have managed to bring it down into the shorter term time frame. Of course, a lot of example charts here at cotbase.com with videos as well, explaining to you how you can benefit from analyzing the markets in this way. So thank you so much for being with me in this review. I hope you enjoyed it. I wish you guys a very good weekend, and I hope to see you in my next COT review. Take care. Goodbye.